Good morning. This is Josh Hayes with Hedge Plus, and here's today's market monitor. Start off today with a quick recap of the crop progress report, a mixed report with corn ratings improving slightly by 1%, while soybean ratings saw a 2% decline. Expectations with soybeans were actually for a 1% improvement. And then with wheat, again, mixed, we had winter wheat condition fall by 2% when it was expected that there would be no change. And spring wheat, on the other hand, improved by 4%. So quite a dramatic improvement for spring wheat over the past month or so. Um, to the point that now spring wheat is slightly above its 5-year average after it was in the worst condition it was in quite a long time out of the gates there. I would say overall with our crop, lost a lot of the early planting gains we've made, but the conditions are strong enough to not be a concern. And basically, what's essentially a neutral report may as well be bearish right now because the lack of weather concern has pretty much got a stranglehold on the market. And taking a look at what we're weighing today, the forecasts, these models, they're really starting to. Uh, we're seeing the chances of a high pressure ridge forming over the Midwest, which would bring hot and dry air. Chances are diminishing. No forecasts are really indicating a high probability of that high pressure ridge forming. It's pushing off any kind of weather concern entirely. The only real concern we've got right now is some areas that have had late planting, and then other areas that have ongoing weather issues that will impact their yield. But that's something we've talked about this quite a bit last week. It's just not something that's going to show up right now. It's something that will show up when the USDA makes adjustments, something the USDA is going to push off as long as it can on the chance that the weather, uh, you know, clears up in the places that have had issues. Interesting dynamic with soybeans. The mandates being raised are fantastic. It's helped soybean oil shoot up limit a couple times now and raise the overall soy complex considerably. But one of the offsets is that it's in the process, it will create excess soy meal, and there has to be a market for that soy meal. Uh, Otherwise, we'll see soy meal prices pretty much weigh the whole complex down. And so some of the gains by oil will be offset by meal, with soybeans stuck in the middle. Overall positive, but just something we definitely need to achieve. We have to find a market for all this excess soy meal. On the bullish side, not much. Corn export sales and inspections continue to remain strong. They continue to go well above the USDA pace, even as the USDA raises these projections. Corn is staying ahead. We're just not seeing it in prices right now, and that's of course on the expectation of perhaps even more acres. That won't be put to bed as an issue until the 30th when we get the crop planted acres report, and hopefully we don't see anything too dramatic as far as a raised number of acres for corn. If we don't, perhaps the market will start to take more note of the strong exports we've had. Exports should continue to be strong because the U.S. dollar is around contract lows, and now we're seeing crude oil creeping up again overnight as the Middle East situation builds and intensifies. Still unclear what's coming, but there have been warnings from both the U.S. and China to people in Iran to evacuate Tehran, their capital, and it's thought that there's something fairly large coming. And Trump seems concerned that Iran has not yet taken him up on his offer to still strike a nuclear deal to avoid what's apparently planned by Israel. So that situation is far from settled, and just the possibility and some of the warnings being thrown about have crude oil rising, which should help a little bit today. Perhaps maybe that's why the markets are flat to up on the overnight. Taking a look at the weather, again, no sign of a high pressure ridge forming over the Midwest. That is going to completely keep out any kind of weather fear from building. Any kind of premium being added to the market as concern for U.S. weather is non-existent. And China, their drought concerns are declining, still getting rain, still expected to get more. Same for Canada, their southwest prairies are getting rain. Their northern areas still need some, but that area is definitely seeing some bountiful and helpful rains to improve their situation. In Brazil, first sign of some kind of trouble there in quite some time. Nothing yet to be too impactful, but something to watch. It's getting too wet in the south, and that is putting their safrinha crop at risk. Not anything too concerning just yet, but something to keep an eye on. On the overnight, corn flat. Flat feels like a win at this point. At least it's not declining, but on the whole, we're down about another 5 cents from where we were at this time yesterday when we were hovering around 540. Beans are essentially even from this time yesterday, and wheat is up about 4 cents from where it was yesterday, mostly on the strength of overnight trade. And that no doubt has to do with growing fears in the Middle East. The wheat market is going to be the number one beneficiary from any concerns coming out of the Middle East. The fear there would be that those countries would start to stockpile and hoard wheat to secure their supply in the event of any kind of disruption. If we start to see the movement of oil threatened, that would obviously do more to help corn and soybeans beyond just the impact on wheat. But so far, no concern yet as to the ability for oil to come out of the Mideast region. We'll be watching that more today. That'll be all for today. We are going to have our weekly Q&A, the Grain Gauntlet, out today, one day early because of the holiday on Thursday. That'll have the markets closed, so watch for that as well. That will be all for today. I hope everyone has a great day, and we'll talk to you again tomorrow.